Okay. All right, so let's begin the end of day review here with S&P 500 futures market. Um, First things first is here is your monthly charts. So month of November is pretty strong bullish bar, and market actually pushing. There's an embedded wedge here. Up is down, up, down, and up. So it's still pushing is further up. And on the weekly is this week right here, closed pretty bullish, although it is sideways. It still is buy signal for this week, which you can see that we gapped up pretty high, and the market is trying to get to these prior week's high, not last week, but the week before. But really, what's more important is these is market going sideways, but wanting to test the November 11 high. November 11 high is 60.45 and a quarter. Is we might actually get there. I don't know, but we'll see. Is bears see this as an opportunity to have a double top, but failure to take out the highs. And close is maybe this week could go sideways and then close bearish. That would be the second sell for bears to sell. Why? Because on the weekly, we have already several legs up, and if this is exhaustion, we might end up going sideways this week and then close a bear bar and then sell. Then we would have a double top is neckline because we have a wedge 1, 2, 3, double top neckline. Last week's low is if the bears get serious the following week, we could come down and test that. But that's kind of up in the air because its market is still bullish. Is it wants new highs. So is what is it doing now? Well, is we gapped up and immediately we hit my is sell zone on the hourly chart. This zone was right here. So if you had this on your chart, is you would have had a sell order there and you would have sold. Bar 1 is a doji because it went up and then it came down. Bar 1, I'm sorry, bar 1 is kind of a doji. The body is almost is half of its entire range. But it's still a buy signal bar, except it's too high. I mean, it's just so too high to buy. If nobody wants to buy here, is we could start to get bear bars. But there were buyers, they bought it. That's because they're probably seeing some kind of a target. So um, that could be up, and then that's 1 hour, and then there you have it. That's 1.5 right there. Look how accurate it is. Is bulls fail to close with bar 2 above the half R, so that's 1, that's 1.5. They tried again and they failed. So now they're getting trapped because nobody wants to buy this high. When nobody wants to buy this high, what do you think is going to happen? What could happen? Well, it's going to come down, but where can it go? It's looking for an average price to buy again. So until it gets to that average price, no one's going to buy. So how do you find that average price? The only way to find the average price is to do what Al says, right? It's something that I learned from Al Brooks. Is if market is too uh, big of a gap up or too big of a gap down, you don't want to sell too far away from the average price, or you don't want to buy too far from the average price. But where is that average price? That's generally 19 bars from here, 1 bar from here. In this case, is bulls moved up. So where would that be? Well, that would be again 18 bars, 2 bars, or 17 bars. So that got to be the low is, and that got to be the high. So what am I looking for? Is I'm looking for market to pull back. First, the threshold. If it closes below the threshold, that is your is 33% pullback. Is that's the 33% pullback right there. So is we tested and then we bounce and we use the threshold as resistance and is we sell. So how do I know we're going to get to here? This is the average price. I want market to come down there. I had a buy order there. Is I did sell, big up, kind of big down, but trading range, but immediately they sell. I know this is going to sell at least to 33%. And once we start to close below is we're coming down to the 50s. But this is where I want to buy. I have a high probability trade here that I can buy average and then go up. Now, if anybody bought above bar 1, okay, and then I'm going to mark here for a second because I'm going to change things around. That is the average price. If anybody is bought above bar 1, and then where are they going to buy? They're stuck, right? So they're going to buy at the average price. If they buy at the average price, where are they going to break even? They're going to break even at the 50%. And where's that? It's right here. So I'm going to do that again. Get rid of this, right? That's it right here. First test, nice close, but how come they're not closing above? Okay, that's the limit order. But what about these? What about the bulls? Have no idea what is an average price, and they have no clue how to buy there. Then they're going to measure from the bar 1 low about 5 points, 10 points. Where did the bar close? Came down 10 points, closed there, open here, doesn't matter. So somewhere in the 10-point vicinity, they're buying the close of this bear bar. So what are they going to do? Well, they're going to measure from there. So where is their break even? Right there, same place. Do we have a bull close above 50%? That's their average price break even? No. That means we are not going to go and test the 1 high. This is it. This is done. And second time, failed. Opened here, went up, failed, came back down and closed. What do you think is happening? It is forming a bear flag. Why? Because we probably have already a break of this trading range. This is a trading range, right? And in fact, if you measure from there, exclude the wicks. Look, they already broke below this trading range low. So bar 7 closed the bear bar, right? And it's selling. So this is my target right here. And we eventually came down here. Look, we came down, we went up, they sold again. They sold again, they're selling. Now I'm looking for ways to enter, right? So what am I looking for? I've got an inside bar. Am I going to sell right away? No, I need to see bulls trapped. Bulls are trapped right here. By the way, I think we just went to my target. Did we go to my target, everybody? I think we just did, didn't we? Yep. All right, so here is the inside bar, 11, and look for, don't sell right away. Look for pullback, right? And some kind of a double top and a trap. Ooh, 13 traps it, but are you going to sell this? If you sell this, they could trap you because you have a trading range here. That's only what first trap. I need a second trap, either at the same height or a lower high, right? I already see a double top with bar 8, so to me, that's great. But the problem here is that you're trying to sell something above the moving average or at the moving average. Not a good place to sell the close of bar 13. If you sell it, you're going to be stuck because probably buyers are there. They were there before, average price, they're probably going to buy again. They want to bring market back up to the bar 1 high. But you got a gap here, probably market wants to give you a couple of legs down. Follow through, pull back, leg 1, and here's leg 2. So I'm not going to sell the 13, I'm going to look for a pullback. Now I see the bulls are not able to close above the 12 high or the 12 close. So now they're getting stuck because we're in a trading range. I need to sell this because I see a double top lower high neckline 13 low or this neckline either or 9 or 13. But I don't see a bear bar that's good enough to sell until bar 17. Oh, that's a good one. I'm selling that. So if this is my entry right here, I can put my stop right above the second, the lower high, right? You don't have to. You could just put it right there, and then you go for a 1 hour. But that's not how I measure it. I put it right there. I'm going to go for this, and if I can get the 2R, I got the 2R, I got the 3R, 3.5, but I couldn't get that. Okay, that's fine. What if you put your stop there? You got your 1R, you got your 2R, then 2.5, you couldn't get the 3. Doesn't matter. If you feel safe to put your stop there, then put it there. But once we get to bar 17, we're not going to go up. So I'm going to keep the risk small, and I'm going to go for 2R. That was a 2R. Anything more than 2R is bonus. You just have to trail your stop. So we got the 3R we got here. And then I also said is midday when I came in is market has, for example, here, so you got a measured move target right there. So we got the measured move targets. And then is we have, you can extend it further down, right? I'm just trying to select this. I couldn't. Right, here we go. Is I could get, let me see, a lot of
Taking a look at the
selling
market
taking
wrap for
place
today's
here. I would
session,
take that.
stocks rose
That would be
alongside
my measured
bonds, while the
move.
dollar fell as
But that
traders
never
welcomed
worked
Donald Trump's
is all
nomination of
that
Scott
great.
Bessent for
So
Treasury
this is your
Secretary,
actual
betting
measured
that the
move
hedge fund manager
targets.
will
You
bring a
should
Wall
take
Street
profit there.
perspective to the
I have.
position.
So I had a
The
bunch of other
S&P
targets,
500
but
briefly
I kept
reached
selling.
6,000 before pairing
Now, I don't
gains.
want to exit
Small caps,
because
which
right
typically operate
here, there's
domestically,
another
closed
flag,
within
right?
striking
Right
distance
here,
of their
there's
all-time
another flag.
highs.
This one sold
Treasuries
nicely. This
rallied
one
across
sold
the US
nicely.
curve, led by longer
This one
maturities.
is, again,
Bitcoin fell after a
inside
rally
bar
towards
29.
$100,000,
I
fizzled
don't
just
want to
short of the
sell the
historic
first
high.
bear bar I see
Oil prices
30.
fell as Israel moved
You
closer to
can
a
sell,
ceasefire with
but
Hezbollah.
your stop needs to be
Markets began the
higher.
week on a risk-on
Okay,
note,
I
as Bessent is
prefer to
well
see
versed in global
another
financial
test because
systems,
I know that
which appeared
underneath
to
the inside bar there will
investors.
be buyers there.
And
And
while
here's
he
my
has
next
stated that he
sell
will
signal,
support the
32.
president-elect's tariff
Is if
plan
I missed
and
all of
fight to
this and I
extend
sold
Trump's tax
32,
cuts, Bessent
stop
is not
there
known
is
as an
that's my 1R,
ideologue,
that's my
raising
2R,
Wall Street
3 and
expectations that
4,
he
and
will
that's beautiful.
prioritize
Look,
economic
we
and
did not
market
close. We
stability
tried and
over
tried, but did
political
not close a
points.
bear body below 4R.
The S&P 500
This
increased by
is done.
0.3%. The
Even
Nasdaq
here,
100
you
gained
get it. But the problem here is
0.1%.
look how
The
many
Dow
times the
Jones
market
Industrial
sold.
Average rose
It
1%.
sold
Amazon
is
rallied while
leg
Nvidia
one,
and
is
Tesla
leg
declined.
two, sideways,
Macy's
leg
plunged
three.
after
So I've
delaying
got
earnings as an
3 legs there. If you don't
investigation
believe me,
revealed a
go to
worker's
line chart
millions in
and you can see
expenses.
it. Right.
The
So
yield on 10-year
down,
treasuries fell 14
up,
basis points to
maybe down, up, down,
4.26%. The dollar
slight
declined
up, and then is
0.5%.
comes down. Or leg one, pull back, leg two, pull back, leg three. Doesn't matter how you slice it, it's there. Okay, so it's market pushed and pushed. Is somebody said this is a spike and channel down. I mean, there's nothing spike about it. It's just I can't draw this, but it's just market coming down, making bear flags. You got a bear flag here, right? You got a triangle here. That's the triangle breakout point. Is you should mark that area because eventually market is going to go there and it's going to test either that is or the breakout test. Bar 26 is the breakout. We're going to test there. Probably there are sellers waiting there. And we did. Look, market came down. This is a small wedge, failed, is got a measured move down. So there is also leg one, leg two, and leg three here. So you have a wedge here, the 28, the 36, and the 39. So you have a nice inside bar 40. I started to buy here. That's micro double bottom. Is I'm buying, and I actually measured is from here, and then I put my stop under 72, and I had is measured move. I'm sorry, not measured move, but hold on. Actually, you should be measuring from here. That was my target right there, and but we held it because we had several more targets that I point count, so we look for that 19, 20 point area before bears showed up. Problem here is that we're testing the breakout area of this triangle. Is there's sellers waiting? It's this. The underneath bar 39, you got bears got stuck. So is market wanting to test this small legs high, the 37 high, then close the gap here, probably going to test around here. There was a ledge there. We tested and then we made a bigger ledge. but is this area, sellers waiting. And those sellers are eager because they're stuck underneath is bar 39. And they started to sell, but who's going to sell against 1, 2, 3, 4, 5, 6 bull bars? First bar, decent close, but it's so small. It's decent because it closed below its midpoint, but it's not on its low. 46 is not a good bar to sell. They're going to trap you. They're going to fade, they're going to buy underneath that bar, and they're going to want to get a breakout above bar 46. So is tight bull channel, is buyers come in with 47, is leg 1, leg 2, right? So retail traders are looking for another sell signal. And that comes in with bar 51. So is a couple of things is you can do to measure. You can measure from where you got stuck and low to low, or is close to close. So 51 close and a 39 close, or is 39 low and a 51 low. Okay, so what you need is market to sell. They started to sell already with a stop up here, is right. So they're selling. So what do they want? They want to minimize the loss. The goal is to get it to the average price and get an average break even. But the biggest goal is to bring it to where they got stuck, maybe the close of 39, maybe one tick underneath. So, or underneath 38, where they saw a final flag, which trapped them, right? You can also measure from there. If you measure from here, right? Hello, if you load it up here by selling underneath 51, you already got the break even. You see, if you sold here, final flag, is that trap you and then closed above where you sold. You're going to wait for a good sell signal bar. You're going to get 80% probability of breaking even, but average. 60% probability you might get to this or this area. Is that never
The EU
happened.
proposes to sanction
So what
Chinese
happened
firms
here
aiding the
is
Russian war
bears came
effort.
down. But the way that we measured the most obvious trap is, which was to right there. So what you do is you wait for threshold to break in order market to come down further. They broke the threshold, but instantly. Nothing's closing. So that means it's already signaling me we're never going to come down to here, is if I measure like this. Other machines measure from where they last sold, which was the flag, bear flag, below 38. So they're seeing something that you may not see because you might be measuring differently. But we already see that the signal is not there. Bears are not
Protect your
breaching the
trade from
threshold,
macro headline
but they
risk
got the
with Financial Juice Pro.
33%. That I
Now only
call early bird
$99 a year
special.
for our
Take
real-time
that
service.
and wrap your books, take your marbles, get out of the sand, okay? The sandbox, because that's it. This is done. It's never going to come down here. They tried once, they tried twice, failed. So now, first buy, second buy. But what did I say about is bar 63? Yeah, it's nice bar, I like it, but only 10% is, or 1/3 of its body is above the moving average. This is not a good bar. But if you do buy it, you still have to scalp it. I did buy it, but I scalped right around here. Bulls try to close the gap with 59 body, but it failed. Yes, bulls see a bull flag, but the problem here is bar 59. They should not have allowed bears print that bar like that. It's just too strong. It's a trading range. We are stuck inside its range, so sellers waiting is at the open or above is bar 59. So what do? You're in a trading range. You're going to have to scalp out. Remember I said I'm scalping this. I don't feel good about it. So I'm pretty much done with it. And that's exactly what I did there. Okay. But then it started to come down. And what did I say about bar 61? Is y'all, this is a breakout, okay, right here. This is a 3-bar breakout. Bears want to sell this, and they probably did sell. This is a 3-bar trading range. 1, 2, 3. Is they did sell the close and they got trapped. So bulls took over. You don't expect bulls to show up right away. If the bears were trying to sell the second leg down from this 3-bar trading range, right? What are they going to do? They're going to sell up here. So they're looking for market to come down, right, to the bar. They sold to the bar. The second try failed. Bar 61. I kept saying, we're going to come down and test that bar 61. Two things can happen. We could test its high or its open and then reverse quickly. That I will buy again. But if we come down and start to overlap with the body and start to close, is a bear body, then the bears will try to sell this further. Now look what happened. Bulls didn't show up, but the bears did overlap and close the bear body. But the bears failed to do one thing. They failed to close this gap. Look at the body 67. Look at the body open 63. When a 63, okay, is opens here and closes there, right? This is still a gap. In fact, this is still open, right? From there to there. Look, they keep trying. They're not able to overlap a bear body at the open of 63 or the low. So to me, is technically gap is closed. I'm sorry, theoretically gap is closed, but technically gap is open. So that means bulls see that as a failure for bears and is not able to sell again. So what are they going to do? They're going to buy. So they started to buy. Bar 68. Oh, that's nice, but its entire body is below the moving average. As a form, it's beautiful. As a close, it's nice. Good bar, good contacts. It's a bull flag, possibly, but bad location. When a house is beautiful, upgraded, it's awesome, but the next door is Al Capone or his grandchildren, probably already corrupt, also living there. Or on the left side, Airbnb. Every weekend there's a party going on. But a great house. Are you going to buy that house? Is no, hell no. I would never buy that house. I would never invest. So this is that kind of a bar that I would not invest. So what do I need? If this bar is 68, most of its body was above the moving average, I would have bought that bar and I would have gone long. So I don't see it. And I kept saying and I kept complaining, I'm not seeing the bar I'm looking for. Oh, that's a nice bar, 71. But it's a bear bar. If it was a completely bull bar, I would have put a buy order one tick above it. They're buying, but it's not going to go far. I said that many times is this isn't going to go far. Why? Because is you have a two-legged move down here. So bulls are going to be slapped right here. So here's the first sell, failed. Here's the second sell. They made some money, but they're not able to come down further. All right, so the bears are failing to sell. This was their first, this was their second sell. Second sell, the moving average failed. No one's buying. I've got a triangle here, so we're getting closer to the end of the day. I want to see some kind of a breakout from somewhere. I'm not buying, and then we came down 75, 76. But bears are not able to sell. Bulls trap the bears with bar 77. Why? Because bar 77 is when the institutions join the market, right? Come in the market. And that's your breakout. But I warned you, if a breakout from a triangle, it's too big, too far away from the breakout points, too far away from the apex, is too far away from the trend line, upper trend line. This is going to trap you because this is a trading range. Triangles are trading ranges. Whether they are contracting or expanding, they are trading ranges. We will come back to the 50% of the trading range, aka apex of the triangle, and then we're going to look for buyers there. We are squeezing the bears out. This is a bear squeeze, okay? When the bears are squeezed out the market, they sell higher to break even, hence bar 78 and 79. And then is they take the average price, they exit. How do you know that they're exiting? When that bar closes bullish or on its high, that it's no longer a bear bar. Then you can buy. But that was the end of the day. I was already long. I took profit, came back down. It's done. But if you held it, market is showing you that it was trying to go up to the 50%. That is 50% retracement of the entire day's range. So I did tell you guys before I started the webinar, I'm sorry, the recap, what? End of day recap or review, that if you're still holding is, and they already bought it, they bought the pullback and they're going to reach, so you might want to take profit right there. So hopefully you already did that. It's actually went up after hours. I just don't have all of the bars, but I'll add it. It actually went up to, um, where did it go? Yeah, it's done. It went up even further, but you're done. Why did we go there? Because I had a area of interest, and I said we're probably going to test that area. So there's no bear bar yet for you to exit out. As far as I'm concerned, this could go higher. Or if you actually take this, this is the area of interest. Look, we just tested the midpoint. Now is the time to wrap it up. If you haven't taken profit, please take your money. This is done. You're done. It's already 4:30. There's no point staying in this. Okay. So great job, bulls. At the end of the day, they squeezed out and a bull flag worked. Is you can also measure the trading range or the channel from high to low, right? If you're still holding at 5 p.m. Eastern time, probably right before 5, we might actually hit it. But when a trading range is this tight, I exclude the wicks because I want a solid target. I want to take my money before everybody else gets trapped. Look, there's already a breakout, pull back to the 50%, and then that's the measured move of this. It's body to body, not wick to wick. So that is much more accurate representation of target finding. So take that, okay? So let me get back to RTH. All right. So you had is stop order buyers buying, is thinking that this is going to be a great breakout, but you're buying too high. When you're buying too high, is you are going to be challenged. Okay, so that's what the market did. So you have is 2 bars. Third bar, bar 3 trapped the bulls. It's coming down. Bar 4 is a strong close. If you're still long, it's time to exit out. So the only time you can hold is you can wait for market to come down to the bar 1 low. You can buy there and look to break even. If you bought above bar 1, if you buy below bar 1, market gave you 50%, okay, pullback is and a break even, and that's it. No bull bars are closing above the average price. That means we are not going to go test the bar 1 high. Bears are in charge now, and it's a gap bar, so expect a bear flag, follow through. That's follow through and a pullback and a second leg, or follow through, pull back, and another leg. So there keeps selling. We now have a contracting triangle bear flag. Is market is selling some more. If we were to come to the moving average, but kept the gap open, I would have had both the small pullback bull trend and look for new highs. That didn't happen. So is we now have a measured move. Is measured move targets are met. We even went further below. So that's it. I'm counting leg 1, leg 2, and leg 3. I am done, and I'm now looking to buy. So you got is stop order market started around here. Stop order market reversal up, midday reversal with bar 40. It's a big down, big up, so it needs to go into a trading range. It's already a trading range with bar 32. I did say that we're probably going to test the bar is 29 high, but if we don't close bull bars, it's sideways and down because bears are trapped. But you're selling against a very strong leg up here. There is 1, 2, 3, is 1, 2, 3. That's a spike. pullback 47 and a channel. We're going to test the low of 47, which we did. Is there was a gap bar 43 and a gap bar 41. One of those gap bars buyers are waiting. We came down and tested the 43 body. We failed to close the 43 gap, bar 43 gap bodies with bear closes. So the bears are done. There's probably a 3 legs here, maybe leg 1, leg 2, leg 3, or leg 1 pullback, leg 2 pullback, leg 3. So now I'm looking for bulls to have 2 legs up, but you're in a trading range. If we cannot break above it,
In
we're
10
just going to
minutes time
go
now at
sideways. I'm
4:45 p.m.
counting
Eastern
legs at
Time,
this
we see the
point.
release of the New Zealand
As we
retail
go
sales quarter over
sideways,
quarter.
it's 20
Forecast
bars,
minus
30 bars.
0.5% on the prior, minus
So market
1.2%.
kept going, but
Year over
finally
year,
we
the
get
prior
the
read was
breakout.
minus
But
3.6%.
it's more bullish because we have double bottom, higher low. We are squeezing the bears out of the markets. First breakout is never a good breakout to buy when market is squeezing bears out of the markets. They trap you. You got to know this, okay? Only those study the behavior will know what that is. You never buy the first bar. You always expect to pull back to the moving average or the 50% average price. Then you buy, okay? That's going to be your squeeze. Now, tomorrow is what can happen tomorrow. So today closed above its midpoint or at its midpoint. I don't know. We could sell and try to close this gap a little bit. There's resistance here, so we might actually come down to these lows. Buyers are probably here. Tomorrow we might come down and test the 1 hour EMA, and then if we bounce, there might sell. I don't know. So you have 1, 2, 3 wedge top, bear flag. Tomorrow we come in and make a lower high and sell. We might actually test these 1 hour EMA, which is this one right here, coming from here. If we move underneath, then we have an expanding triangle up and possibly down. Last week's midpoint is 59.3475. You might even test here and then bounce back up. That could put us into a trading range, y'all. So is tomorrow, the next days, we could get a lot of trading range price action. If bulls want to buy, I don't know. I think the November 11th is a magnet still. They want to go there, but I don't know. This is a bear flag. Okay. So we might actually come down tomorrow, but we'll see. I'm looking forward to reading the blog post, daily blog post on brookstradingcourse.com. If you're not signed up, you should sign up. You get the weekend reports. That's the only email you get anyway. We don't spam you. But if you haven't, just sign up for the website so you get the early blog posts. Registered members can read it earlier than any other public members. So anyway, so we're sideways. I think market wants to go and test the bar 5 body. If we go up
According to the
tomorrow,
White
maybe
House,
gap up
US official
slightly,
McGurk will be in
that's
Saudi
where the
Arabia
sellers are.
on
We could
Tuesday to
actually start the
discuss
swing
using
down.
potential
If
Lebanon
we start to
ceasefire
come
as
down,
catalyst for potential
there will be
Gaza
some buyers
ceasefire.
at the moving average and with bar 40. So we could also go up, but that would create a lower high and then sell some more. So we'll see how this goes. Anyway, I'm going to take some questions. I forgot to open the question box. I'll take 3 questions
Do you
and then
want to
I'll
stay up
end the
to date
day.
with the
So if you have
latest and be on the
anything.
bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial
Yes, the
Juice
one
Pro
question
or a year's
is
worth of
thinking
our
about
service
where
for
bulls
the
and
price of
bears are
1 month
trapped.
and
One of the
save
most important
92%.
things to think about when looking at charts. Well, um, markets are two-sided trading, right? If there are buyers, there are also sellers. If one institution is selling, the other institution could be buying. We don't know. But this is why market goes 2 legs up, 2 legs down. Sometimes 3 legs. That's exhaustion. Is sometimes you get 4 legs. That's like max exhaustion. Those are rare, but generally that's what you get. So, but generally I count 2 legs, right? So price will try to do something twice before giving up. So is if someone's buying, someone's selling. If someone's selling and they get trapped, Now the buyers want to move with 2 legs, and those bears, sellers who are trapped, will wait for 2, 3 legs before selling, and they will wait for a good signal bar before selling. So you have to really learn all of that, and then and you're golden. Okay? Yeah, traps. If you don't understand how that works, that could be a problem. I mean, you can always be a swing trader. You can always be a look. You don't have to worry about those. If you have a large account, you can simply sell here and then find, okay, these, I don't know, like there's a balance zone here. The market spend most of its time somewhere in here, right? Went
A
up,
US
came
judge
down,
grants
went up,
dismissal of Trump election
failed, came
subversion
down,
case.
failed to break down, went back in.
And in 5 minutes
So
time
it's
now at
spending a lot of
4:45
time
p.m.
here.
Eastern
This is
time,
where the
we get the New
orders are
Zealand retail
balanced.
sales numbers.
So this is a
Quarter over
magnet.
quarter, forecast
If
is
it
minus
gets a breakout, this
0.5% from the prior
breakout is
minus
not a good,
1.2%.
breakouts are not good price action. This is good price action. Price goes sideways. This is average price. This is the agreed price that bulls and the bears agreed that the contracts, S&P contracts, price is good here. So a lot of buying and selling. This right here is bad price action. It's imbalance. It's something very fast happening, something very strong. Needs to be corrected. When it starts to go into a correction phase, it's going to want to go back to where it agreed that price is good, and that's this area. So if you actually understand that this is in a good price action, and you sell a good trap, bar 4, and then you see that the trap bulls are not able to fix anything, and they're exiting the markets, you can sell, you can swing all the way down here, okay? Then you take your profit. But again, I would recommend you to study that, but you don't always have to know. But again, this is a trap. Any imbalance, any breakout will trap you, always. Even if it's a successful breakout, it will trap you, okay? Would a stop order sell under bar 4 be a good sell? Yeah, I did say that you should actually start to sell because look at the bar open and close. Look at bar 3. Is if bulls were in the markets, okay, why did the bar open lower than bar 2 close? If market is bullish, shouldn't bar 3 open either right at the 2 close or higher? Instead, it opened lower and closed lower. That right there is your indication that market might be getting trapping the bulls here. But how would you know the bulls are trapped? You get a second bear bar, it even opens lower and closes lower, and taking out a strong bull open and close, like 2 open where the 1 closed and then closed higher, and yet it took all of that away from bulls. That right there is your cue. Is you can literally sell the close, put your stop. That's your 1R. That's your 2R. Look, comes in, and that's it. So, or measure from here. That's your 1R. That's your 2R. That's your 3R. That's your 4R. But how would you know that there are sellers? How would you know that the 4 would be a bear bar? You would not know. You would not know that bar 4 is going to be a bear bar. But how would the markets enter into a short trade? I mean, look at this gap up. It's so up high, it's like the nosebleeds. It's so up high. So how do you know bulls are agreeing to buy? They seem like they were agreed, and then this happened. Wow. Why is this happening? That should have been a bull doji, not a bear doji. That should have been a bull doji that closed higher, even if it's a doji bar. Closed higher or at the close of 2. It didn't happen. So what did the market, what did the institutions do, or the traders, smart traders? They start to trail a sell order, sell stop order underneath bars. First, it's there. They wait for bar 2 to close. As soon as 2
1 minute remaining.
closes,
I'll be leading with the New
they
Zealand
put it
retail
underneath,
sales
1 tick
quarter over quarter.
underneath 2. As soon as 3 closes, they put it. So what they're looking for is an entry. They're looking for bulls to trap and enter instead of buying so far away. You enter, then they measure where they entered, right there. Then they go for a 1R, 2R, anything more than that. If the body, bare body, closes below
Excuse me,
2R,
New Zealand
do
retail
not
sales data
exit.
are not coming out at the
Stop,
time of release here.
okay, because this
My
is a big
apologies.
up, big down testing. It's kind of a trading range. Is you have to scalp, but leave a runner. Your runner should come down to here. It even gave you a 4R. Or measure is if they're already selling here, right? One tick is underneath bar 3, is start counting. You should be getting a 5 points at the minimum. That's 5 point. They started to go fast. So that means 10 points, right? Is 10 points swing. Oh my gosh, they closed the bear bar below 10. That's got to be 15. Holy cow, it's 15. Then they closed below 10. They tested 15 below 10. It goes up. I bet it's going to 20 point. Mark the 20. Keep selling into 20 and take profit there. Doesn't matter where this goes after 20. Your job is to take profits from this low is into the 20 because it can trap you, and it did. Look, then it start to go. Now, what are the bulls doing? Is they're waiting for bears to get 2 legs down, right? Here it is. 2 legs down. They started to trail their buy stop, starting from here. So there. This bar now closes. Bar 5, lower above. This bar closes is lower above, but it's not a good bar. All right, this bar closed, took out the prior low, and closed the bear bar. Are you going to lower there? If you lower there, what are you going to do? And you got trapped. Look what it did. So you put it, this bar closes, and then you immediately put it there. One tick above is bar 7. And then bar 8 goes and traps you. Now, first of all, if you're ever taking the Brooks price action course, yes, you can always enter and exit trades like this. There's no problem doing that. But you also have to buy, again, somewhere down here. Maybe 5 points, 10 points lower. As it goes up, you can exit. But by default, if you're trying to trade markets, take the Brooks price action course, okay? brookstradingcourse.com. Take the course there, and then you learn is you should never buy when there's a gap like this. You should never buy above bars, especially bear bars. There will be sellers there. Why? This is a gap. Is bears are selling. They're looking for follow through. They're looking for follow through at least one leg down. So is where are those sellers? If you have taken the course, you would know there are limit sellers waiting above bars, above bear bars. Okay, there are stop order sellers waiting below bars. So is what would I do? I'm not entering. I'm leaving my stop order there. I want to see bull bars. I want to see 2 legs at least. This to get another leg down. Look, this is a follow through. Pull back is this is the second leg. Okay, so now I'm going to continue to trail this if I can select. So now is this one closed. Okay, I'm gonna put it there. This is the second leg. So now I'm looking to enter and make money. This one closed rather bullish. I'm gonna put it right there. Ooh, inside bar. Ooh, drop it. Probably buyers are coming in, and I can look for 2 legs. Leg 1, pull back. Leg 2, I entered one tick above, and I should be making 5 points minimum. Like that's a 5. It went 525. That's great. That's 5 points an extra tick, and then closed it down here. Then it went up a little bit, gave everybody their 5 points before coming back down. So you got a 5 point scalp there. You're going against the trend. So you better get that 5 point. Anyway, so there's so many ways to enter the market, but I see this, I'm looking for a follow through. Follow through is 6 and 7, pullback is 8, and that's the next leg. And then I'm looking for 2-legged move for bulls. That's the one I can enter counter trend and make money. Okay, so was it a good sell? Yeah, it was a good sell. It trapped the bears. It trapped the bulls. and then is start to come down. So you should take profit somewhere at the open or somewhere between the open and the low of bar 1 and expect buyers there. Okay? But if there's a gap bar, then don't worry, it's probably going to come down more. There's room to the moving average, and it comes down to the moving average. So leg 1, leg 2. Okay? When bar 49 printed above EMA is with a pretty good close, how could you know it might be a trap? Bar 49. I love these questions. All right. Okay, let's read the question again. Is when bar 49 is printed above EMA with a pretty good close. Okay, yeah, I see it. How could you know it might be a trap? Well, first of all, we didn't know it might be a trap, but look at this. Look at right here. This is resistance. Resistance, okay? And this is big down, probably leg 1 pull back, leg 2 pull back, leg 3. So when there is a wedge, right? So when there is a wedge, when wedge is reversing, where's it going to go? To here. What is that? That is the third leg's starting point, right? So this is the third leg starting point, right? And it moved is leg 1, leg 2. Leg 1, pull back, leg 2. So what did this create? Big down, big up, trading range. I don't know what's there, but in our case, it was like this. So it is some kind of a resistance, right? I go up a little bit, and now you should look for two-legged move or three-legged move before you buy again. So to me, this is a leg, this is a pullback, right? This bar did not go below this bar. This bar did not take out that low until bar 46 and 47. 47 took the 46. So this whole thing could be a one big leg pullback, and this is the leg 2. So if the bulls are having leg 2 is into a breakout point and these last third leg starting point, maybe you shouldn't buy anymore. Maybe you should look for now bears to come in with 1, 2, 3, 1, 2, 3 before you buy. 1, 2, 1, 2. See how that worked out? Does it make sense? So is because there's a small trading range or forget about everything. Forget I said that. What do you see here? Forget about the breakout test. Forget about the third leg pullback is by bulls. What do you see here? This is a spike. What do you see here? This is a pullback. What is a spike pullback followed by? I'm sorry, that's a bad English. What does follow spike and pullback? Channel. Spike, pullback and channel. What's in the channel? Either two legs, thank you, Krishna, two legs or 3. 1, pullback, 2, pullback, 3. 3 could be double top or 3 could be like that, or it could be this 1, 2, 3. Okay, so this would be then lower high, and then you would sell like that 1, 2, 3. What is your goal? This. You want to align with this right here before you buy. Okay, so that's what you need. So let's take a look. I'm sorry, guys. I'm super congested. I can barely breathe. So it's your spike, it's your pullback, right? That's maybe 1, pullback, 2, pullback, 3. Where is this gonna go? Where's the pullback? Bar 47. Haven't I said that we're gonna come down and test the 47 low? Now what do I need? 2 legs or 3 legs. Leg 1, pullback. Leg 2, pullback. Oh, leg 3 extended way too much. Are you going to sell this? No. No, they're going to trap you. There's a trading range. They're going to trap you. How do you know they would trap you? Well, first of all, they have tested what they came for, which was this is spike pullback. Please pay attention to this. This is so important. I had to listen to L to listen to this, like understand this. It took me a while because I always skip this pullback part of it. I'm like, he'll say, oh, it's the starting of the channel. Where is that? But I finally understood it's the pullback. So it's there, but we're overshooting. Why? They're looking for buyers. Why? Because their bears are stuck, so they want to sell and get some kind of a relief. Those buyers are with the first gap bar right there. So do not sell this. Look to buy. What do? Measure that gap from that close to is that close. There's a gap there. Start putting buy orders at the 50% and lower. Lace this area with buy orders. You enter and you look for a 2 legs up. So basically, that's what you're doing. If there's 3 legs, it's the starting point. If it gets above, it can go to the second leg starting point. So this is the third leg, right? We breached it, so we're going to go up to the second leg starting point. We tested 2 legs, leg 1, leg 2. Now you can sell the other way. You're also in the trading range. Makes sense? Does it make sense? Dennis? Oh no, that was not you. That was Christina. All right. All right, I'm done with my session, everyone. You all have a great afternoon, evening, wherever you are. I will see you guys Wednesdays. I'm not trading. Hold on a minute. So let me see. I'm trading tomorrow, but I'll be on the Discord. All right, tomorrow is 26. That's going to be Tim Fairweather and Brad Wolf, and I come in on Wednesday. So I'll see you guys on Wednesdays, and then we have the Turkey Day, yay. And then it's going to be short day. No, we're closed. Well, I mean, like stick a fork in me. I'll be done eating that turkey, and there's no way I'm trading that 29. Market will be open probably. Well, we'll come back on December. So I'll see you guys on Wednesday. Bye, everybody.